Facts. Hey gang, I'm Dr. Who. This is Accounting is a Joke, where accounting makes sense so you can make dollars. Today we're going to take a look at a walkthrough problem on how to properly measure and journalize transactions based on the LIFO method. So if you're unfamiliar to the LIFO method, don't fret gang, I will drop a link to get you up to speed in no time. With that being said, let's get it. So it tells us that Golf Unlimited carries an inventory of putters and other golf clubs. The sales price for each putter is $119. Company records indicate the following for a particular line of Golf Unlimited putters. Let's check that out. Okay, so we have a data table for the month of November. And the requirements are to prepare Golf Unlimited perpetual inventory record for the putters assuming LIFO costing method. And journalize the limited inventory transactions for LIFO. Alright gang, we already know what it is. We're dealing with inventory, and inventory has costing methods that will dictate what the proper amounts are for the ending inventory that belongs on the balance sheet and the cost of goods sold that belongs on the income statement. And so this particular problem is dealing with LIFO. And LIFO tells us that the last purchases, the most recent purchases, are always the first ones to be sold. And so we're going to utilize that to get through this particular problem and fill out the proper table that's provided. So let's get to it. So we're going to start by completing the inventory on hand based on November 1st. And as we can see in the table, we had a beginning balance gain of 24 units at $53. This is basically what we carried over from the previous month, which was October. And so we're going to input those figures in there and calculate the total cost by multiplying the 24 units times the $53 each, which will give us a total amount of $1,272. We're going to check the answer. Fantastic. Now we're going to account for the November 6th sale of 20 units. Gang, we are practicing LIFO, but at this particular point in time of the month, we only have one set of inventory to account for. Why? Because November 8th through the 30th hasn't taken place yet. So in terms of being on November 6th sale, there's only one place that those 20 units could come from. And you got it, gang. Beginning inventory, the 24 units at 53. But we only need 20, so we're going to account for those. And to calculate the total cost, we're going to multiply the 20 at 53, which will give us $1,060. Now we're going to focus on the remaining inventory we have available as of November 6th. Gang, we started out with beginning inventory of 24 units. We just finished selling 20 of those units at a unit cost of $53. So how many units do we have left? Easy breezy, gang. We have 4 units left at a unit cost of $53, which will give us a total amount of $212. We're going to check the answer. Nice work, gang. Moving on. November 8th dealt with a purchase of 30 units at $70. This is straightforward, gang. We're just going to input that amount under the purchase column. And we know 30 units at $70 each gives us a total cost of $210.
You sit on a throne of lies.
So now we must consider the new available inventory we have left on hand. Gang, right before November 8th, we realized we had only 4 units left at a unit cost of $53. But we just made an additional purchase of 30 more units at a cost of $70 each. So obviously, we have a total amount of 34 units. Therefore, we currently have left available 4 units at $53 each, would give us a total cost of $212, and an additional purchase of 30 units at $70 each, which gives us a total cost of $2,100. We're going to check the answer. Good job, gang. Now we're going to account for November 17th sale of 30 units. The object of the game is to consider where did those particular units come from as of November 17th sale of 30 units. And we're practicing LIFO, gang, which means that the most recent purchases, i.e. the last thing we've purchased since November 17th, will be the first to be sold. And so looking at this particular list as of November 17th, the most recent thing we purchased came from November 8th, gang. We made a purchase of 30 units at $70 on November 8th. So you know what that means? All 30 of those units has been sold on the 17th. Therefore, we're going to input the amounts and move on to our available inventory we have left as of November 17th. Now, we already know we had an initial purchase of 30 units, of which we just sold them out in its entirety. But we already had an additional 4 units remaining from our beginning inventory at a unit cost of $53. That's all we have left, gang, as of now. So those are the only units that we're going to report right now as of November 17th. We're going to check the answer. Good job, gang. Now we're going to focus on the final sale for the month of November, the 2 units. And we're still practicing LIFO, gang, so we have to consider the most recent purchases first. But you know what? The most recent purchases took place on November 8th, and we've already sold all 30 of them. So the only other place that we have units available comes from our beginning inventory balance at a unit cost of $53. Therefore, all 2 of those units are going to go out at a cost of $53 each, which will give us a total amount of $106. Now, moving to our inventory left on hand, gang, we already smell what's cooking in the kitchen.
Yup!
We had 4 units left right before November 30th at a unit cost of $53, but we just finished selling 2. So how many do we have left in inventory for the month of November? 2 units at a cost of $53 each, which will give us a total amount of $106. And so now we're going to go ahead and sum up all the totals and check our answer. Bags all day. So they want us to provide the cost of ending inventory for the entire period. Well, that's easy, gang. The cost of our ending inventory, which we know are the 2 units at a total cost of $106. We're going to check the answer. Great job, gang. Now they want us to identify the cost of goods sold of the 52 units, which we've already calculated to be $32.66. We're going to check the answer. Good job, gang. Now that we're finished completing the table, we're going to utilize all of that information calculated to record the proper journal entries for the transactions of November under the perpetual system. Remember, the perpetual system for inventory dictates that we make our recordings after every purchase and sale as it affects inventory. So in terms of the November 6th sale, we must record the revenue earned as well as the cost of goods sold. Remember, gang, the revenue earned for the period will not consider the purchase prices. It will consider the sales prices. And we saw at the beginning of the description that we sold our products at a selling price of $119. So in terms of those 20 units that were sold on November 6th, we're going to take those 20 units and multiply it times the 119, which is the selling price, which means that we're going to debit accounts receivable and credit sales revenue for the $23.80. We're going to check the answer. Well done, gang. The November 6th transaction is not fully complete because we must also recognize the cost of goods sold. Remember, gang, inventory is an asset when you purchase it, but the minute you sell it, it becomes an expense to the company. That expense is called the cost of goods sold. And therefore, we've calculated the cost of goods sold amount for those 20 units in the previous table, which means that we're going to debit cost of goods sold and credit merchandise inventory for $1,060. We're going to check the answer. Fantastic. Now we must journalize the November 8th purchase of the 30 units at $70. Easy breezy, gang. We're going to multiply that 30 at $70, and that's going to give us $2,100. And we're going to debit inventory and credit accounts payable for the amount. We're going to check the answer. Well done, gang. So now it's time to record the sale of the 30 units from the November 17th period. And we already know the deal by now, gang. We're going to debit accounts receivable and credit sales revenue for the total amount that consists of 30 units at $119 each. That should give us an amount of $2,100. And we already know the deal by now, gang. We're going to debit accounts receivable and credit sales revenue for the 30 units that were sold at a price of $119 each, what gives us a total of $35.70. We're going to check the answer. Fantastic. Now we're going to utilize the table to recognize the cost of goods sold that has incurred on the November 17th sale of $2,100. Therefore, we're going to debit cost of goods sold and credit merchandise inventory for that amount. We're going to check the answer. Nice work, gang. Do the dance with it for real, because you guys are learning. And for our final transaction for the month of November, we have to record the sale of those 2 units, which means that we're going to debit accounts receivable and credit service revenue for the 2 units at $119, which gives us a total of $238. We're going to check the answer. Nice work. And don't forget to recognize our cost of goods sold for those 2 units as well for the total amount of $106. We're going to check the answer. Good job, gang. So there you have it. A nice, beautiful illustration of how to properly utilize the LIFO method when measuring cost of goods sold or ending inventory, as well as journalizing the transaction. So if that light bulb clicked and it brought you further to chasing the bag with this accounting information, smash that like button, smash that subscribe button, and share the channel with your friends so they can chase the bag too. As always, gang, I love the energy and the time that you guys share with me, and I will see you soon. Bags!